Okay, I just want to follow on from what we were talking about yesterday about trading in general and plans and targets and who we're trading with. So the first thing I just want to look at is I just want to read out this article which I found on the internet a couple of years ago, and I just thought it was very well written and made a very valid point, because traders often beat themselves up about their performance, what they're trying to get out of the market, given that the huge amounts of money that are around. And so the guy titled his story, "Are All Traders Useless Morons?" So I'll read it out rather than anything else. I think that's probably the easiest way. If I read it out, if you just bear with me 1 second. Wrong keyboard, that's why. Okay, so this is not me speaking. This is this Barry's talking here. So over the holiday vacation, try to kick back a bit, unwind, recharge the batteries, and still scan my favourite media sources and blogs for interesting ideas. One that stood out was a short post from this guy from Dragonfly Capital. "We are all useless morons that suck," which made him laugh out loud. And basically pointed out the truth that is ignored by all too many investors, that this trading thing is really not your forte, and that you suck at investing, and also your advisor sucks at investing. So if you had picked the best stock to buy, I just want to follow on from what we were talking about yesterday about
into
trading in general and plans
mid-December.
and
That's in a year.
targets and who we're trading with. So the first thing I just want to look at is I just want to read out this article which I found on the internet a couple of years ago, and I just thought it was very well written and made a very valid point, because traders often beat themselves up about their performance, what they're trying to get out of the market, given that the huge amounts of money that are around. And so the guy titled his story, "Are All Traders Useless Morons?" So I'll read it out rather than anything else. I think that's probably the easiest way. If I read it out, if you just bear with me 1 second. Wrong keyboard, that's why. Okay, so this is not me speaking. This is this Barry's talking here. So over the holiday vacation, try to kick back a bit, unwind, recharge the batteries, and still scan my favourite media sources and blogs for interesting ideas. One that stood out was a short post from this guy from Dragonfly Capital. "We are all useless morons that suck," which made him laugh out loud. And basically pointed out the truth that is ignored by all too many investors, that this trading thing is really not your forte, and that you suck at investing, and also your advisor sucks at investing. So if you had picked the best stock to buy every day, you could have turned $1,000 into 264 billion by mid-December. That's in a year. That's 1 year's return. Okay, so you read all these get-rich-quick schemes and all the rest of it, etc. In theory, if you bought the best stock every single day, that's how much money you could have made. However, most of us do not get a 1,000,000,000% return, or even 1,000,000%, 1,000%, or 100%. If you didn't hit 100% return, then you did not get even 4 10 millionths of the available money. I think that's quite thought-provoking, if I'm honest. I think you have to really give that some thought. How much money is actually available every single day? So basically, most people suck at stock picking or bond picking or any other sort of picking that they might do. Likewise, if you're running dollars in an index fund, if you had a good year beating your benchmark, then congratulations, but move on, keep trying to get better, because you still suck. Now obviously no one's got perfect knowledge to be able to pick the best stock every day or every week or every month, and also swing a programmer, not a mathematician.
In the 90s.
Beating myself.
Them, but frankly they really are up against it. Other people are sat
year-on-year, 4.9 above the previous of 4%, and month-on-month 0.6 below the previous of 1.2. That's for the Swedish PPI.
Same area for buyers and sellers to agree on price. The one thing I would say is that given that we know that we started to get fresh information through at 1:30, so perhaps we should look at splitting the day into two different types. And the new information came out in the Y period. I just want to see how that looks if we just do a split at Y, because that's when Mr. Draghi started talking, and see how it looks. Okay, so we end up with something a bit different. What we end up with is the morning session pre-ECB is nicely balanced. Nice selling tail, nice buying tail, and that is where the volume went through. The same price. Basically, no one was prepared to take us anywhere different other than where we were the previous day, because everyone knew we had new information coming out at 1:30 which was likely to move the market. Now, as it happened, it turned into a bit of a chop session, as you can see, whereby we went down earlier on and then later on we went up. It's reasonably balanced. It's saying on this post Draghi, we've got the volume back up at 18, not far away from where we agreed on earlier at 21, but we spent the most time down here at 10, which ironically enough is the day's midpoint as well. So that's where we spent most of our time, basically in the middle of the day's range. Our 14 still just about shows up. It's not as significant as it is over here, 14, but nevertheless it does show up as an area. That's when we created our buying tail, and later on we had a selling tail within the morning's range. All in all we can really say is that post Draghi, value dropped a little bit, not dramatically, but certainly after Draghi there was it reflected what he said, which was basically nothing. The way it reflected it is that the sellers were able to after quite a sustained period. So this was going on over the press conference. So from 2 o'clock through till 3:30, this war was being fought out in this range. And there was just, sometimes the sellers looked like they were winning, then the buyers looked like they were winning, and the sellers looked like they were winning, and the buyers fought back. And then eventually we got the decisive move lower. And it went, and once it went, that was good. And that's the whole point, is that you've got these sellers and buyers fighting it out the whole time. Again, I'm not going to show you the footprint, but the footprint did eventually give the hint, give the lead as to what was going on. But it was a really, really difficult trade, particularly that. That was horrible for everyone involved. Okay, a lot of people got stopped. What was that, sorry? That spike, yeah, you like that, yeah? Yeah, lots of people like that one. That was a clear stop out trade. There's no doubt about it. That was done to stop everyone out at new highs. But this was an example of a real
new
battle
high
going
DAX.
on, and we didn't know who was getting involved. We didn't know are the long-term buyers buying here, this just we don't know? Is there long-term sellers here? We don't know. We don't know what's going on. There's just a fight going on, and the key is to try and work out the winner. The footprint told us eventually.
Is that the S&P?
This was the S&P, yeah, yesterday. Well, the DAX would have all the
It's quite similar, right?
yeah, it would have been. Yeah, it would have been exactly the same. Yes.
Sometimes in this kind of market,
Yeah, I mean, what you don't want to do is get chopped up in the mess. So you want to wait out. Sometimes this gets chopped, and then you've got to wait for the. So people get. What tends to happen in that is that people are getting long up here and they're short down here because they're waiting for the breakout. It's volatile, it's busy. They go, oh, this house is going to move, it's going to move, and so they get long here and short here, and they keep repeating. Or maybe in the middle they go, it's going up here, so I'll buy it here, they run over there, and get the stock going down here. So you want to wait for the decisive confirmation of what's going to happen. There's no point in guessing. And then eventually you're going to get the move. And hopefully, in my ideal world, you get a breakout, a retest, and then you go. In my ideal world. But you know, you need to. The trouble is that what happens is people trade here, and by the time this happens, I don't know if you listen to Dan. I don't know if any of you are in time to listen to Dan's thing this morning. One of the things I asked him to say is that yesterday was a classic example where lots and lots of people got involved in this rubbish, and then usually what happens is once this is gone, you do get a very clear telegraph move. Quite often. And it's much, much easier to trade and make money. The problem is, people very need to stop down today. So they're so incredibly strong that they can only trade to a really small size and really do just
With that.
Depends who was ill.
You might.
So they keep on testing below to see if anyone wants it, anybody else is. They're going to probe the market, they're probing the market.
but it's kind of current.
So they get wait long, they get exhausted.
Just do a global
If we're in a downtrend or uptrend, and if you get volume, because you can obviously get volume on a yellow candle and a green candle, or you can get volume on a red candle.
And fixed income funding respectively is also 5 and 10 auction out of Italy. So quick look at the price. Fully 5 prior cover was at 1.51, 1.51, and an average yield of 44 basis points. The 10 prior cover was at 1.33, an average yield of 1.5%.
Not much move. Small wave. So you can get, this is what I was trying to work out, you can get a very, very big volume, a very small move, which is a low volume with a big candle. It means that the other party aren't getting away.
Floater, as well as
that's the end of it.
If you see a big volume, first signal and that's a confirmation. ETF of S&P 500.
What speaks for the Roy Eurozone current account surplus isn't optimal.
Yeah. But I mean, for me, I need to find a way to simplify it because I still,
It's got about 3 minutes now.
Something
Top
that
in terms of the running order,
I
we'll
think
do the economic sentiment print first, expected 103.8. We'll then have a look at the consumer confidence, expected at -9.7. Business climate seen at spot 0.8, and industrial sentiment seen negative 4.2.
You had your level 80.
yeah. I was scared. I thought I shot it once and then I got scared.
Yeah, we expect these motion results to hit slightly after the top of the hour, so
I thought after this one it was going to go back up because it's clearing about one tick. I thought maybe we might go, but it finished so bearish.
After here, it's other points of nuclear.
But even here, all this,
It's a risk concept.
yeah, well, it's a big move and yeah, but you see, confirmed everything, but then it takes up the whole bloody move as well. Then that's what I don't like. And you can only get like 63 down to yeah, 10 ticks left, and then 10 ticks left. Nice, still better than nothing.
Probably the good one.
And this is the one
Here,
this is the
so
yeah,
you could see the other as well.
yeah, it's, it's making me want to get rid of everything now.
What's the guy called? What's the guy?
Guys, sorry.
Yeah.
Do you know that our charts are? Is your charts are on the right time?
Yeah, you got to increment them by 1 hour back.
I've changed my market profile because the letters
Back.
got.
Yeah. You have to take them back. Whatever time you've got in your chart settings.
You have to do it in chart
Adjust,
settings.
yeah,
Okay,
chart
that
settings,
minutes
go
of
to the time,
just a
and
reminder,
put
we'll
it back by 1 hour.
economic sentiment, then the consumer confidence final print, and the
Okay.
rest of the sub-indices.
That's what I did to get my chart.
Oh, that was just
I
me.
don't understand why, but it worked.
It worked.
It doesn't make any sense, no. You think you put it forward, but we've gone forward in time,
Okay.
so therefore we're out 1 hour ahead now, like in the real world.
Yeah,
But I don't think this has
In the
changed.
Sierra one.
they
Yeah.
didn't change.
I
Yeah.
don't think that has changed. It is with Steve Spencer.
Isn't happy.
But he trades stocks, but his principles are what he does.
Is it?
Yeah. Steve Spencer. Not with 1E. That's it. Yeah. I think it would be
10 seconds.
If you look at the way he looks at his
103,
charts,
103, prior revised to 103.9 from 103.8. Consumer confidence comes in negative 9.7 as expected. Business climate indicator spot 11, beating expectations of spot 0.8. Industrial confidence negative 4.2 versus an expected negative 4.3. Services confidence comes in 9.6, short of the 10.8. Do have a couple of revisions to the prices. Let's just recap on these data once again. Economic confidence 103, short of the 103.8 expected. The prior does see an upward revision to 103.9. Consumer confidence negative 9.7 as forecast, matching the prior. Business climate indicator spot 11. We were expecting spot 08. Prior revised up to spot 09 from spot 07 initially stated. Industrial confidence negative 4.2, beating the negative 4.3 estimate. Prior sees a upward revision to negative 4.1 from negative 4.4 initially stated. Services confidence 9.6, which is short of the 10.8 forecast. The prior does see an upward revision to 10.8 from initially stated 10.6. got Eurozone consumer inflation expectations at 2.1% from a prior 3.7, and selling price expectations negative 4.4 versus a revised negative 5.6. That i.e. a cheap bill, Iran can bring back oil production of 500,000 barrels a day within 1 year from existing oil fields. Birol is stated to believe that there would be a huge amount of new Iranian crude and that gas production entering the market in the short term.
It's like looking through his charts, the way he marks his charts is very interesting.
But should we get the results of an Italian 510 as well as that 2021 in Lincoln very shortly? There is a few comments up on the board as a preview for those who are interested. According to one of the previews this morning, it seems that comments from Fed Chair Yellen might play quite a key part in these auctions today. Yellen's double speech yesterday afternoon from New York set the scene for extended bond gains seen overnight. She maintained the FOMC's message that rate rises would be gradual and would only come after careful consideration. Comments from the Chinese president: Chinese economy at, quote, a new normal, shifting to a moderate pace of growth from a high one. acceleration there. It was a 2022 first from Italy that we're expecting. Just getting the Euribor numbers coming through over here. 3 month negative 24.3 basis points, 1 week Euribor negative 35.4 basis points, and the 1 month unchanged at negative 33.2 basis points.
Everyone finished? Coming to the end?
Not quite.
Not quite, okay. So, questions? Any questions? Any observations, thoughts? I mean, you know, this is one trader's view on things. To be fair, Waka's is sort of the expert on this sort of stuff in the office, and people go to him rather than do their own research and ask him. He's got a remarkable memory, and will say, "Do you remember that day back in 2010 when blah 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 happened?" And I've got to be honest, I can't remember what happened yesterday, let alone what happened in 2010. But I think that's because I've got early Alzheimer's or something. But he has a remarkable capacity to remember all sorts of amazing details, which obviously stands him in good stead for trading. It's a very useful skill to have. But any thoughts, questions, observations, ideas?
It's very important to have a strong view of the market as a whole, even though if you're not trading equities or bonds or oil. It's very important because it gives you forward guidance.
Yeah. Okay. Yes and no. I would say it's important to have a very strong knowledge of what's going on in other markets. Not necessarily. You don't necessarily have to have a very strong opinion as such.
Knowledge, yeah.
But then it's the knowledge that you need. The idea that okay, what's been going. You know, for example, the gold market. You know, it doesn't on a day-to-day basis. It doesn't affect us or move us. But you have to have a good idea of what's been going on. Likewise, things like copper. What's going on in the Aussie dollar, for example. All these things, you know, are useful to know, because one day, the way the markets move is that at any one time they can suddenly start focusing on one thing. So it might be copper, it might be oil, it might be dollar yen, it could be. You have to be able to put all that straight into context, you know, because you don't know from day to day what it is that's going to, you know, be highlighted. So yes, it is important to keep an eye on everything. Anything else?
The other thing you said in the beginning, he said the way we trade, we really don't care intraday what's going to happen. I mean, if any news is going to affect our market today, because the way we trade, it's a lot different from long-term investors. And we're not putting money and waiting to get a return in 3-5 years.
Yeah.
So don't focus so much on that.
I think the problem with the thing about day trading, why I think that, you know, day traders are the most knowledgeable and the best traders, the good ones are the best, because you have to know everything, and because we don't know from day to day, as I said, what the market is going to focus on, what is it that's going to be leading us today, where's the focus. And we don't have the luxury of sitting down and reading a 30-page report on what the long-term trend is in the balance of payments in Spain, for example. You know, what we do know is that maybe a Spanish bank's in trouble. That's going to have a risk-on, risk-off effect. Where is that? Where are the Spanish bonds in relation to the Portuguese, in relation to the Germans? Blah blah blah. How can we put a trade on? Do we want to be trading the euro on that? Do we want to be trading the German bunds on that? Do we want to be trading equities on that? All these things make a difference, and I think that's why, you know, a really good day trader has to have a lot of knowledge and a lot of sort of ideas as to what's going on, and what matters and what doesn't. You know, we suddenly hear that there's a I don't know, a tsunami in Thailand. Are you going to trade off it? If you do, what are you going to trade, etc., etc. If you hear that there's a bomb gone off in I don't know, Sebastopol, for the sake of argument, are you going to trade off it? Blah blah blah. You know, all these things. You've got to understand all sorts of different things in order to make a trading decision. Anything else? No?
This carry trading talks about.
Yeah.
Kind of interesting. I'm not sure if I'm quite understanding. I know that I think the general principle is you borrow the cheaper currency and use it somewhere else where you get a better
Well, effectively, yeah. Effectively, the idea is that you borrow it for virtually free or zero. So, for example, with Japan, in that case, so people were borrowing in the heyday of carry trade, and it's not going on so much at the moment. But in the heyday of carry trade, you're basically borrowing money at zero, or in fact nowadays in Europe, perhaps less than zero. Anyhow, you're raising money, you're getting it very, very cheaply, and then you're taking that fund. You are then investing it into something that's funding more. So, for example, New Zealand or somewhere like that, could be New Zealand, Australia, could be US Treasuries. They're yielding 2.2% or something. And then you don't just take that full profit though, because you obviously have to put a hedge on for your currency. So you've got to hedge the currency as well, usually via options and stuff like that. But you still leave yourself enough money that you can.
I just want to think of on a practical level how, what you just mentioned, you've mentioned options as well, in terms of completing that overall position. On a practical level, how do we do that?
Oh, we don't do the carry trade.
We don't do
No,
the carry trade, but
we don't.
Understand that it happens.
But we understand that because the huge flows that are doing the carry trade, we are with the several different ways of doing it. You can buy one currency and sell another, or vice versa. You can invest in whatever they are investing in. So they've borrowed money, they then converted it, and then they're buying something. Let's say they're buying US Treasuries for the sake of argument. You want to buy US Treasuries because you know that flow is going on, and you can tell it's going on because you can see the currencies moving. And the currencies are still moving. You do that because what they're doing is they're selling that to buy that. So as long as that's going down, this is a correlation. You're seeing that go down. As long as that's going down, this should go up. Now that can flip to and fro, but that's the basic idea. We don't actually do the carry trade. You know, we're not a long-term trader. These carry traders are doing it. You know, they're locking in a profit for 3, 6, 9 months. But it's these flows that we're looking at. Maybe. In times of stress, that's why people were buying gold. So they were selling equities, which was a real worry, and then they were buying gold. Different trades take place at different times, different periods, and different times. It's a case of trying to work it out. Even just intraday, sometimes you might see, well, if oil goes up, oh, I can see that my S&P ladder goes up as well. So clearly, one's following other, but half an hour later, something else might be happening. And it's just looking for these links and things to give us something else to help us make a trading decision. And the key, as always, is what are we trying to do really? What we're really trying to do is identify where the buyers are and where the sellers are, and we're trying to join in on a winning side. That's really what we're trying to do. Okay, and that's all of this is about, really. It's trying to identify, are the buyers in control of this market? Are the sellers in control? Whoever's in control, I want to be on their side. That's my job. Until I see that the buyers are no longer in control and the sellers are taking over, then I want to change.
Interestingly, it sort of links with the thing he talks about when you're saying about narrative and leading everybody to understand the narrative for it to work.
Yes.
If you're the first to buy and everybody else is still going buy.
That's the trouble. I mean, sometimes you can be too clever. You can be too clever, and you see something and you get in before everyone else. But if no one else is doing it, it's no point. It's a bit like, a tree falls down in the forest. There's no one there. Has it happened? You're too early. It's no good if you're looking out the window and you see a plane blow up and you put a trade on. That hasn't happened until it hits the news wires. And so you can have your trade on too early. And this is a very important concept. It's not news until everyone's aware of it and knows it's going to happen, and then you get that weight of money. So you can be too clever, see something before everyone else sees it, and you're just ahead of the trend, and no one can see what's going on. Anything else? From the video? No?
Questions? No questions.
Okay. I just want to come back to the bund because it got quite interesting, as you can see. So here's a bund, and if you remember when we had a look, let me
He might
He
have.
was ill.
He might have been ill.
For some
Yeah,
of the
and
days that John had to cover.
Exactly, yes.
What we can do, I'll to Imran and get a short thing on deal pricing. He's much
That would be great.
and
You see, basically take all of this stuff off. You don't need any of this. And you literally all you need is just one a normal chart. There's this guy on Twitter, let me show you. This guy on Twitter, every day he posts charts.
Still 45 million dollars in 7 information.
But this guy is probably he's on them. You know, one good trade in the book. There's a book by a guy. Steve Spencer. This guy. If you look at all his,
Folks, got about 10 minutes at the top of the hour now. Let's have a quick look at the UK June cases on that data from the Eurozone. Economic sentiment, business climate, industrial sentiment, services sentiment, as well as consumer confidence print. Starting off with consumer confidence expectation is that the final March data will be confirmed at negative 9.7, negative 9.7. Economic confidence forecast coming at 103.8, 103.8. The business climate indicator seen nudging up very slightly to 0.08 from 0.07. Industrial confidence seen at negative 4.3 versus negative 4.4. And services confidence forecast coming at 10.8 from 10.6.
Well, this is a fallback, isn't it? It's
It's just for the
to buy more. Yeah, and buy more. One thing I've noticed now I see is that it's almost like you have a
it's not to buy now, it's just to see if there is anything else below.
see what to see if there's any more
If there is
any more value below. I think so. I like it. One thing I've
and if you
noticed.
leave it then
So you're saying like, so for example,
I would do another point. It's easy. They don't want to start advertising in the market already getting to so they test
so they keep testing below to see if anyone wants it, anybody else is. They're going to probe the market, they're probing the market.
But it's gonna come.
So they just wait long,
Just to do a global
Oh, if we're in a downtrend or uptrend, and if you get volume, but you can obviously get volume on, yeah, like on a green candle, you can get volume on a red candle.
Fixed income funding respectively results for 5 auction out of Italy. So a quick look at the price. Fully 5 prior cover was at 1.51, 1.51, an average yield of 44 basis points. The 10 prior cover was at 1.33, an average yield of 1.5%.